Matthew, thank you for having us on today. My name is Peter Ruse from Mont Royal Resources, and I'm joined here with the newly appointed CEO and Managing Director, Nick Holthouse of Mont Royal Resources as well. We are a critical metals development company with assets in Quebec, Canada, and very excited to be talking to you today in the sort of near-term lead up to our readmission to the ASX, which is expected on or before the end of October. So yeah, it's an exciting time. We're listing into a very strong market, and we're excited to talk to you about this asset and the new plan moving ahead.
Peter, Nick, good to have you on the platform. And yes, you're right. Timing is everything, especially in a rare earth at the moment. Look, it might be worth sort of having a few seconds just to understand who each of you are. So if you don't mind, Peter, maybe give us a bit of your background, and then Nick, if you could do the same.
Absolutely, yeah. So look, I come from a equity capital markets background. I've worked at various long-only fund managers, and I entered into sort of public director life by virtue of floating Mont Royal Resources back in 2019, with the IPO taking place on the ASX back then, and since then I sit on a couple of other boards, both on the ASX and in London, and yeah, that really sums up my experience. Over to you, Nick.
Thanks, Peter, and good to meet you, Matthew. Nick Holthouse. I'm the newly minted managing director for Mont Royal Resources. I'm a mining engineer. I've been in industry since the late '80s. I've got a really strong operations focus, but more recently also getting into projects, and more recently again project management and corporate management. I guess most specifically and most pertinent to this conversation is the last 8 years, which has been in the rare earth space. So 4 years with Hastings Technology Metals, a very similar flow sheet to what we see at Ashram. The last 3 years as CEO of Metallurgical Resources, a very different flow sheet, but again, a very high grade, very exciting project. And now this particular opportunity with Ashram.
Thanks very much, guys. Peter, can we just sort of try and understand the setup and what exactly you're trying to do? So obviously Mont Royal coming together with Commerce. Why?
Yeah, so look, Mont Royal was established by myself and a mentor and sort of close friend of mine, Michael O'Keefe, who's better known for his background in various successful corporate ventures, Riversdale Mining, Riversdale Resources, and he currently sits on the board of Champion Iron, which operates out of Quebec as well. The genesis of Mont Royal really was he was set up as a vehicle to take advantage of picking up projects really with a focus on Quebec. Having been lucky enough to be a shareholder very early in Champion Iron on behalf of my family, we've had an amazing run through that stock, and it was really when I took the opportunity to take a site visit up to the Bloom Lake mine that my eyes were opened up to the opportunities up in Quebec, and it was a happy hunting ground for M&A. Roll the clock forward 5 or 6 years, because this transaction we're talking about today has really been in the works for the last 18 months, so it's been a long journey. We were introduced by a couple of common directors that were on the board of Commerce Resources and had put a meaningful amount of money into Commerce Resources. And really the synergies between us being a tightly held, well-structured, low-cost base listed ASX entity and the ambitions of Commerce Resources to migrate down to the ASX, because I think we know, and your audience would know, the ASX is a happy hunting ground and a pretty warm audience to rare earth companies, both in investor attention and raising capital and profile for assets. So we really, the two companies came together and agreed on a plan, doing a Canadian plan of arrangement to bring the two companies together, raise a bit of capital, which we'll talk about, and basically come out with a primary listing on the Australian Stock Exchange and then have a secondary listing in its native home on the TSXV. So that's really the background to what we're doing there. We were able to attract, someone with amazing experience like Nick to come in as the CEO and managing director, and even more importantly, Nick has agreed to relocate to Montreal to run the assets, which is a paramount sort of condition precedent for us, particularly Michael as well, because Michael relives his journey of moving from Sydney to Montreal to run Champion Iron. He stands by the fact that he would not have achieved half of what he's achieved by trying to run a company from with a 30-hour flight away, or in a different time zone.
Yeah, absolutely. Critical, I would say. Just in terms of kind of remaining regulatory and kind of shareholder approvals, what's left to do, and when do you expect to get this over the line?
So look, both shareholder meetings have both been carried out and very strongly voted in favour. Really, as we sit here today, we have got very little to do other than issue the shares and carry out some last minute paperwork sign-offs. Our shareholder spread, which is the number of retail shareholders, is in with the ASX to be approved. But really, we're talking very ancillary last minute type checks and balances before being given our official listing date on the ASX.
Right, okay. And in terms of the management composition post-merger, obviously Nick going to Montreal is great. Is that where the bulk of the management team will be? Yeah,
so as a part of the transaction, there is one surviving director from Mont Royal, which is a gentleman called Ronnie Beaver, who I believe you know. He will remain as a non-exec director, representing Mont Royal's interest in the merged company. The board then is comprised of 4 other directors: Cameron Henry, who is an engineer, and he will chair the company; Adam Ritchie, Jeremy Robinson, and Nick. Nick, you'll go into the team that you're going to build over time in Canada with you. But there's another lady called Cindy Valance, who is our corporate affairs and government liaison, lobbyist engagement role there, which is hugely important for a project like us. Yeah.
And just so I'm really kind of clear on what this kind of new merged entity looks like. Obviously, Mont Royal, you've got the Northern Light assets, and of course, Commerce's Ashram project. So, is this going to be firmly positioned as a rare earths project, not a critical minerals project?
Absolutely, yes. I mean, I probably use that as an umbrella term, but it is a rare earth development company first and foremost. Yeah, as Nick will go through in a second, the asset has been drilled to an inch of its life. It's had an enormous amount of drilling, so we don't really need to be deploying huge drill programs onto the resource itself. But really, it's going to be focused on taking this into the next stages of its development pathway. Northern Lights assets will come along with it.
Right.
They offer a bit of call it sex and violence for some future exploration. However, it's the focus is on Ashram. Yeah,
I can tell you've worked in the same room as Merlin Mar Johnson with that phrase. Right. Let's again just finishing off on the kind of the corporate structure before we can get into the assets proper, if you don't mind. So simple things like the name of the merged entity will remain Mont Royal Resources.
That's right. That's
okay,
right.
Fine. In terms of the kind of I guess the capital structure at the moment, what does that look like?
Yeah, so the two businesses come together. There'll be approximately 190 million shares on issue, with a starting par price of 20 cents Australian per share, with circa 10 million Australian dollars of cash that was successfully raised about a month ago in a heavily oversubscribed offer. So we're really talking of a fully diluted company market cap of around 36 million. Enterprise value 25. So based on what you'll hear from Nick in a sec, it offers a huge compelling upside based on EV, enterprise value per ton of material in the ground based on its resource of just under 200 million tons. So
Okay.
yeah.
Okay. Last question for you before Nick and I chat, which is, and in just headline terms, don't need the detail precisely. So, in terms of priority milestones for the next 6 to 12 months, what have you tasked Nick and the management team to deliver?
Well, what you're going to hear in a minute is our major focus here is to unlock the options about connecting this asset to the market, which is by way of a road development story, and engaging with all the local groups to local First Nations and government departments to make that happen. And I think if there was ever a time to do such a thing, now is the time, where the Western governments are really waking up to critical metals and sourcing them in their own backyard, as opposed to relying on China to get all those materials.
Okay. Like I say, timing's everything, but you've also got to execute. So, Nick, hi. Can you just give me, or give the audience a sense of the kind of current development status at Ashram?
Sure. Look, as Peter alluded to, it's been extremely well drilled out over the last 10 or 15 years. There's well over 30,000 metres of drilling there, which has delivered a resource of around 70 million tonnes indicated, and 130, 140 million tonnes of inferred. Very unanimous sort of grade, sort of sitting just under that 2% TREO grade, but also, interestingly too, a really good proportion of fluorspar comes along with this story as well. And fluorspar is a really quite an exciting side angle to the whole rare earth story. They come together, and I think it's potentially a very interesting value add to the story going forward.
Okay, so lots of drilling. Have any engineering studies happened? Any underway?
Certainly. Look, there's been quite a bit of metallurgical test work. There was a PEA that was undertaken back in 2012, I believe, 2015, somewhere around there. Now that is sort of sitting around the same sort of metric base that we're looking at now, the same sort of throughput. Certainly things have changed over that time. Recent metallurgical test work has seen some really important improvements in the flotation response. Those flotation kinetics are really strong, and it's one of the things that really attracted me to this project. This is rare earth projects on their own can typically have some really fantastic headline numbers, but when they get to that all-important metallurgical stage, they don't particularly translate well in some cases. But I'm really pleased to say that this project certainly does. We get incredibly good recoveries. So we're looking at producing a concentrate of around 35, 37%. Now that really does give you options in that very early sets. So, we don't struggle in that early concentrate phase. That gives us those really strong kinetics, which Mother Nature has really given us. There's not too much you can do outside of what impurities you see in the mineralogy and the metallurgy. But Mother Nature's been very kind to us in that sense, and she allows that very strong flotation response and allows us to deliver a real good quality concentrate. From there, you can move forward.
Right, and can you give me a bit more detail on that? Obviously, the name of the game is to produce saleable NdPr oxides or mixed carbonate products. Have you got a sense of which markets you can sell into?
Oh, look, ultimately we can sell into all of them. Our basket is typically light flavoured, so we have around 22, 23% NdPr in our basket. Really attractive to magnet makers. But on top of that, we have about 1 or just over 1% of DyTb. So although we don't sort of promote ourselves as a heavies rare earth operation or project, what we do see is, because of that really strong response we see in that flotation process and those really high mass pools we see, on a per tonne basis, we're actually producing a significant amount of heavies that come along for that. So on an annual basis, we're looking at producing around 150 tonnes of Dy and perhaps a little bit less Tb on an annual basis, around 3,000 tonnes of NdPr. So these are significant numbers. And they certainly value add to the basket that we see.
And with regards to, and it's historic data, 2012. But can you give us a sort of sense of some of the numbers involved? What's the scale potential of what we're looking at?
Yeah, it's a good question. And there's been a lot of, a lot of thinking done in that space over the last few years. But really for us, I think we're about halfway through a PEA. We're having a good look at what work has been done. With that refresh. I think there's an opportunity to scale back a bit. They've probably gone in a little bit too hard. Bringing the tenor of those tonnes back to and delivering around 12,000, 14,000 tonnes of TREO a year is probably about the right size, the right sort of scale for an operation. So meeting the market with around 2,800, 3,000 tonnes of NdPr a year. It's a bite-sized chunk that most separating entities will sort of look at without going too hard, and that nice lick of DYTB that comes along with that as well. So translates to about 1.2 million tonnes a year is sort of the throughput. So what we're doing is really bringing the scale back in. We're still coming to market with the size and the chunk of total rare earth oxides, but de-risking the project with a sense of its size. Again, this is a deposit, and this is one of the exciting attributes about this deposit is it's eminently scalable. It is a giant blob of carbonatite, very low strip ratios, and the ability to scale this thing up over time is real. So we can start at any sort of tenor we like and then build up over time to meet the market.
Okay, and how again, you're doing work on the fluorspar byproducts, I suspect, now, but because I guess I'm interested in that it's a different market from the rare earths, obviously, and how it affects the economics or the potential operating cost reductions, and what sort of contribution do you think that's going to actually give, or is it inconsequential?
It's not inconsequential, but it's not. It certainly doesn't have the horsepower that the rare earth oxide basket brings to the story. So, the TREO story probably brings around 90% of the value. And the value add with fluorspar is probably around 10 to 15%. But, and it really depends on where we take that over time. And it depends what fluorspar product we make as well. So we know we can make what they call a metspar product quite easily. It's around 65% fluorspar. And that's a product that services, aluminium, steel, and uranium industries in North America. North America has got a real dearth of original fluorspar operations. So most of the fluorspar products are coming to the States, whether it's at the chemical grade or at the metspar grade. They are imported and not produced in country. So it's listed as a critical mineral, and I think there's a real opportunity there to bring this to market.
Okay, and with regards to maybe to just talk about where you're at. We know the province, great for mining, but in terms of specifically where you are, infrastructure, logistics, etc.
Look, we're in a really challenging part of Quebec. There's no two ways about that. We're about 200 or 300 kilometres north of Shefferville, which is essentially at the end of the rail line. So there is a road that needs to be built. We are working very closely with government on that story. But I guess, look, one of the really refreshing things is that I've experienced over the last 3 or 4 months with this company and my meetings with government, particularly at the provincial level, but also federal. But at the federal level, the provincial level, there's a really strong impetus to try and take this story forward. There's several government groups which have a real focus on opening up that northern part of Quebec. And I think, as Peter alluded to before, that amazing news from Prime Minister Carney a couple of months ago now around Canada going to 5% GDP spending, 1.5 of that 5 earmarked for critical mineral projects and associated infrastructure, and that really fits within our remit in bringing this project forward.
Okay, so where do you see the work coming up this year? Is it drilling, network, pilot scale processing, or is it was it all on the PEA? I think,
it's very much a development story going forward. So we're really changing the characteristics of the project, and that comes, and we're changing the characteristics of the management team as well. There's more than enough exploration work that's been done on this thing for the short while. We don't need to do any more drilling for at least the next 2 development phases. So to close out the PEA, to go forward with the pre-feasibility study, there's more than enough drilling there to do those 2 pieces of work. But we will have to bring the bits back and the rigs back and do some drilling for the DFS just to potentially add some measure to the schedule and satisfy banking requirements. But there's plenty of drilling that's been done at this stage, and the focus really now is going forward on improving metallurgy. Metallurgy is the heart and soul of these operations. So the better we can get at that, the more value we can bring to that project and de-risk that project, and early engineering as well. So those things are really key. And of course, permitting, environmental studies and permitting are really important. So really advancing.
Let's pick up on some of your experience there with Meteoric and Hastings in terms of what kind of immediate operational improvements do you see needing to be addressed?
Oh, look, I think, this has been a project which has sort of been ticking along for quite some time now. And I think, one of the risks that I often see in projects that have been in progress for quite some time and not moving too far forward is that some of the concepts get rusted on. And so at the moment, we're having a really good look at all the work that's been done we've got some fresh eyes looking at that work, and there's some really good work that's been done. I'm absolutely not discounting the work that's been done so far. Some great work that's been done, but a fresh set of eyes on that is going to be able to perhaps crack open some opportunities and take us through to that next level of value for this project. So we're certainly doing that. We're spreading that level of expertise a little further. We're bringing some of that work back to Australia. There's some really smart people over this way that will be looking at this story, but also a lot more work to do in Canada as well with the flow sheet.
Right, and then maybe Peter, I don't know if you come in here or Nick, you ask this one. With the whole North American market lighting up for not just critical minerals, but specifically rare earths after the MP deal with the US Department of War and Apple, how does a Canadian company insert itself there? You referenced obviously Carney opening his wallet a little bit, but North America is really dependent on what the US market is doing, isn't it?
Certainly, yeah, and it's certainly a market that we need to try and meet at some stage. So talking to industry is really important, but what we need to do, and Peter got it right from the very start, we need to demonstrate to industry how these molecules are going to get to market. So, getting that sort of all-important infrastructure piece in place is key. There's no better time to go and do that than now. There's a lot of pressure in the sales, and we need to take advantage of this moment in time. But absolutely, meeting that market in the States, demonstrating how we can bring those molecules to market, I think that's going to be a real re-rate for this story going forward. And it's certainly one of our main focuses in the next 6 to 12 months is getting some sort of commitment out of government to take the story forward.
Okay. And Peter, in terms of going out to market and talking to investors, what are you hearing? Where's the money going to come from?
Look, so we, as I mentioned earlier, we were fortunate enough to have a very oversubscribed offering of our capital raising. That was predominantly very solid family office style investors. Given our market cap and given the quantum of money we raised in this initial period, there wasn't an awful lot of room for institutional investors. That being said, we did invite 3 or 4 new Aussie instos onto the register, which is great, and some of which we hope will build their position over time. But I think, as Nick picked up, there are a number of corporate opportunities as well with partnerships and sharing information and MOUs, that sort of thing that will form the focus of my role as in corporate development moving forward. So it's going to be a really busy year ahead. There's no shortage of interest from other groups that we want to talk to, share ideas, test work, collaboration, etc., to open up new opportunities. Yeah.
And Peter, for you, when you're obviously having these conversations direct with investing groups, family offices and otherwise, where do they see the value? It's not just the buzzword, we got rare earths. In terms of the execution, in terms of your plans, your business plan, what are they buying into? They're
buying into a solid management team here. They're also buying into what Nick was really labouring that point for, is the metallurgy and the amount of work that's done on the metallurgy. I think, as we all know, there are graveyards full of rare earth hopeful companies when the market does turn. But the amount of good work that's been done on this and the confidence that I think that Nick, as CEO, has brought into the seat, having a long list of experience with other rare earth assets, has given the investors a lot of confidence that this asset is truly the largest undeveloped in North America, which it can hang its hat on. So it really is it's drawing that attention because of its size and scale as well.
Okay. And like Nick, so it's back for you in terms of looking at the market and the comps and so forth. There's probably lessons to be learned from Caldera, Yangibana, etc. I mean, what are the important deliverables for you in terms of this scaling the Ashram project efficiently?
That's a great question. Look, it's at the end of the day, and there's been a lot of talk about government support. There's certainly been lots of examples of individual projects getting significant government support. The floor price story is something that we've been championing myself and my peers have been championing for quite some time. We see it as a much more fairer and equitable way for good projects to get up and thrive. And not only, it's not just at projects at the front end, at the mine gate. that need to get up. It's the whole ecosystem that needs to build out. We need to have a really strong separation story. And one of the things that I'm really strong on is the fact that junior mining companies shouldn't be going out there and trying to do everything themselves. It's just not possible. This is a highly competitive, highly technical, and a very expensive place to operate. So you really need to try and stick to your netting. If you're going to go further downstream, you need to do it through collaboration on JVs. And that's really, I think, that's really the focus that we're going to have. So for us, it's about delivering a project, and you still need to deliver a project that is at the bottom end of the cost curve. That's always important. It doesn't matter what sort of support you're getting from government, what sort of leg ups you're getting, you need to have a competitive project. So that's really a focus for us. We want to make sure we deliver an efficient project, which is at the bottom end of the cost curve. And we have something that's exciting and attractive to industry and collaborate with industry going further down. Now, how far down we go, I don't know. It really depends on what sort of opportunities pop up. But, that idea of having some sort of ownership of a magnet at the very end is really enticing. But we certainly don't want to go out there and try and build a magnet ourselves. That's just not going to happen. So we're going to stay at the left-hand side of the value chain, and we'll keep working with industry and slowly chip our way down into that value chain. And we'll see how far we get over time. But I think that's really the smarter way of doing it. This whole floor price scenario that we're seeing at the moment, the government support that we're seeing at the moment, is really starting to fatten up that value chain going further down. And that's what we need to see. We need to see lots of separators. We'd need to see a lot more metallizers. We'd need to see a lot more magnet makers in the West. Everybody needs options. There's plenty of space for everyone, but that's what you need. You just don't need more lights. You need everything to build out.
Makes sense to me. Right. And Peter, just final words from you. You've obviously got to get this thing over the line, listed. And the next 100 days are important to you guys. So what should we be looking out for?
Yeah, look, I think you're going to see a regular stream of news from the team once Mick's established up there, which is only a week or two away. We're going to sort of re-educate the market about the amount of work that really has taken place at this asset. And as Nick said, good quality work, but really with an exploration lens on it, which is now changing to very much a development lens. So yeah, look out for obviously, re-education of the asset, its merits, its scale. And then we just hope to start to tick off some of these development milestones, recommencing the second half of the PEA and then some new key hires potentially, building out the team, and then a lot more engagement on the corporate sort of partnership route potentially into the new year and beyond.
Gentlemen, appreciate your time today. Stay in touch. Let us know how you get on, okay?
Look forward to talking to you again.
Great to chat.
Yeah.